What's up, clan? Island Trader FX here. Of course, back with another one. It's been a bit of a minute. It's gonna take a little while for me to upload that video, but nevertheless, you're seeing it because I did upload it. Of course, we're just gonna be looking at some of the trades that I took last week. The background is a bit noisy, so I do apologize for that. I took three trades. You will see on some accounts I did get a W, and on other accounts I took an L, but same pair. So we're gonna take a look at that, and I have a little bit of a vlog going on towards the end. So stay tuned. All right, clan, we're finally on the chats. I was doing some journaling, so we have some lipstick on. But I'm just going to go ahead and remove that. As a matter of fact, I think I could leave it for a while. We're going to go over three pairs. We're going to be doing GBP USD, we're going to be doing USD CAD, and we're going to be doing USD JPY. Like I mentioned, these are some of the trades that I would have taken throughout the week. Okay, so where GBP USD is concerned, we were looking to buy. As you could see, GBP USD has been bullish on the daily time frame for quite a while, right? They did have some bearish market structure to the downside. Let's go on to the weekly chart just to see, or just to further break down what it is that I was seeing. All right, so we're on the weekly chart. We could definitely see this huge expansion to the upside. Right, this expansion did what? It created weekly context, right? It created a weekly fair value gap, and you could see that after price dipped into that weekly imbalance, we could see a huge rejection to the upside, although not outside of that fair value area. We could still see a huge rejection to the upside, so that tells us something, right? So when I boiled down and I ran down to the daily time frame, what did I look for? Okay, so let me just clear it up a bit. Let me just clear some things up a bit. So right there, where we saw that weekly rejection, we could see on the daily time frame, price created a daily imbalance. And of course, if price creates a daily imbalance, it has to fill in that void, and this is what we targeted. Okay, so this is the daily imbalance right here, okay, and we waited for price to dip into that imbalance. Of course, we have two ways to enter. Please excuse my sinus. But we have two ways to enter. We could either enter off of the 1 hour or off of the 15-minute. This time around I entered off of the 15-minute. So this is the daily zone right here, nice and clear. This box right here is the daily zone. I'm just going to change the lining to maybe white so that you could see it. Okay, perfect. So you could see price dipped into that daily zone, and after price dipped into that daily zone the first time, we could see price creating a 15-minute expansion to the upside, right, leaving behind what? A 15-minute fair value gap. You could see price also create another 15-minute time frame fair value gap higher up. But what I'm really interested in is seeing price disrespect this high right here. So this is the high that I want to see price disrespect. If you are expanding to the upside, right, you are showing me that you're expanding to the upside. What I really want to see is for you to disrespect the high and continue pushing higher, because what? A bearish market is characterized as lower highs and lower lows. So the minute we go above a high, which creates a higher high, this is no longer bearish structure. Okay, so we want to see the bulls in charge. So after price created this two fair value gaps, 15-minute fair value gaps, and busted through this high right here, what did I do? I waited for price to just retrace back into that high. So that little movement back down into this high, this is where I entered. And where was my take profit? Of course, my take profit is usually at my 4-hour zone, my 4-hour close, and this is exactly what I did. So let me see if I could find it. Let me just close that out here. Yeah. Yeah. So beautiful. My 4 hour zones right here. This one. Opposed to taking this one just for the RR, the risk to reward, I took this one, and you could see price just pushed right into there. Boom. Gave me a beautiful um 1:1.2, nothing too crazy. And then after, price dropped all the way back down, right? I took that on one account, and I will definitely put the screenshot up. On another account, looking at the overall time frame, right? When we were on the weekly, we could see that price is actually bullish, and it is just in a bullish fair value area, and it has to fill it. So when the new week opened up, and we had this massive expansion to the downside. Let me see if I could just locate it. We had this massive expansion to the downside, right? Sweeping this low right here on the 1 hour time frame. I just said to myself, well, of course, price is already in a fair value area. I entered. I entered right here, and I said to myself, you know what, after I enter here, I'm just gonna put my stop loss under the sweep. Um, but ultimately it did not work out, and price, as you could see, if my stop loss is under the sweep, you could definitely see that price swept even lower. And although it's no longer under the sweep, it pushed higher, but the fact remains that it pushed lower. But ultimately I took a W on that trade, and I took an L as well. But that was it for GBP USD. What's always important is following your plan. That is what's most important. Okay. So we're going to go ahead and jump over to USD card. No, before we do USD card, we're going to jump over to USD JPY. USD JPY was a really nice trade, really solid trade. Love USD JPY, man. So on USD JPY, I also took an L and a W on this one. Let's just take a look at it. On the daily, we could see that price has been pushing to the upside wonderfully. Price has been pushing to the upside. When market opened on one account, again, after the sweep, right here, the sweep of these lows, because this was a Sunday execution, right? After the sweep of these lows, oftentimes Sundays are very rewarding for me. So after the sweep of these lows, I figured, man, price is bullish, right? You had this beautiful rejection to the upside. I went ahead and I entered after the sweep, okay? And my stop loss was under the lows. It did not play out, but guess what? It told a different story. It told a different story on another account, and we're going to look at that. So right here, right? So we've been looking at some bullish market structure to the upside, clear as day. Okay. If price has to continue to push higher, they should be following um, the bullish discounted areas. Okay. And we could clearly see that the day opened up, and what did it do? It closed outside of this bullish discount or premium area. Okay. So this in itself told me that, hey, price wants to disrespect that zone. Now, seeing that price did disrespect the zone and close below, what did I do? All I had to do was flip my narrative. Okay. Price pushed and closed below the zone. I said to myself, okay, well, that means that the buyers are no longer in charge. The sellers wants to come in charge. So I located a 4 hour zone right here. It's clear as day. 4 hour fair value gap. Doing what? Overlapping with the low, with the sweep, right? We had on the Sunday. Sorry, again, excuse my sinus. Overlapping with that sweep. And then as soon as price tapped into that zone, what did I do? I placed my stop loss above this high right here, and I targeted this low right here, this 4 hour close right here. I just did not want to be greedy, seeing that I already took an L on a different account trying to buy. I didn't want to be greedy and trying to make up for profits and all of these things. That is the quickest way that you fall when you try to do these things. So I took a lovely 1:2.5, which is pretty decent. Okay. But the ultimate TP would have been this beautiful low right here. Okay. 1 2. So we could have even gotten a 1:5, which would have been beautiful. Yep, 1:5 would have been splendid. But nevertheless, we got what we got, and we are indeed satisfied. So that was it for USD JPY. Okay, and last but not least, Mr. USD CAD. Although I took an L on that trade, I was very proud of myself, and this is when you should be proud of yourself. When you followed your plan to the T and it does not work out, you should be proud of yourself. Okay, because in the long run, this is what is going to keep you from blowing your accounts. This is what is going to keep you from taking irrational trades. Okay, so let's just dive into that and take a look at what I saw. Obviously, on the weekly chart, we could see that price has been bearish, price has been falling. And guess what? Price has not been coming into weekly premium or discounted areas. So guess what? Price is running towards somewhere. And where is the somewhere? Where is the draw on liquidity? This was the draw on liquidity. Okay, this low right here that I marked off, this was the drawn liquidity. If price did not come back into that weekly context and price wanted to push lower, of course I highlighted this area as the drawn liquidity. Okay, so in price pushing down to my foreseen draw on liquidity at the time, price would have created a daily context. And this is what I love to see. So at the time, this day wasn't there, that wasn't there, that wasn't there. But you could see price tap into that zone. And what did price do? Price wicked all the way back down. And I said to myself, look like we're going to be getting a good one. And so I jumped down to the, not to the 1 hour time frame, but to the 50-minute time frame. And what did I want to see? I wanted to see several things, right? I wanted to see price leave behind several fair value gaps, but similar to, I believe it was GBP USD, I just don't want to rely solely on fair value gaps. I want to see price break bullish market structure and show me that it wants to continue to the downside. So one fair value gap, great. Two for value gap, great. We love to see these things. These things show that price is in a rush to go somewhere. But what I was most interested in is price breaking this low right here, this 50-minute low right here, and breaking this low right here, this other 50-minute low right here. When price broke this low, this told me everything that I needed to know. Okay, so I place my sell limit right here, right after price broke this low. Where did my stops go? My stops went above my high, and this is what I was looking for. Where is my drawn liquidity? So this is what I was looking for. Look, I was looking for a beautiful 1:1.7, almost a 1:2. And we could see we were in profit for a little while, and then we were in the red, and then we were consolidating, and then we were But the moment I saw all of this consolidation, that told me one thing. Because oftentimes price tells you what it wants to do. And this I would sometimes consider to be candle science, or I would call it candle science. Because if price has to really get to a drawn liquidity, price is not going to waste time. Okay. And let me just go back on the daily time frame just so that could show you what it is that I want to show you. If price wants to get down to that drawn liquidity after this huge rejection here, let me tell you, there is no reason for price to continue pushing higher. If anything, a new candle is going to open up right here, and then you're going to be seeing the next daily candle push and close somewhere below here. Okay, if you're seeing that the next new daily candle that has formed has now pushed above all of this lower time frame expansions that you would have noticed to the upside, and then the day closed there, this is a red alert. Price is telling you what? Price is now telling you that it is disrespecting this daily bearish fair value area that we have marked off, and it's no longer interested in continue pushing to your so-called draw on liquidity. Okay. Now, one thing that you would want to take note of, anytime you see price is doing things of that nature, consolidating in your zone, closing in your zone, this is one day that closing the zone. This is the second day that it's closing in the zone. A new day has opened up within the zone again. Chances are that price is pushing to the upside, and what you should be doing now is looking at a new drawn liquidity. If it does not want to go ahead to the downside, then guess what? It wants to head to the upside. So this right here, I'm not interested in this pair this week, but this right here would be my new drawn liquidity. Okay, so I would do something like that, something of that nature. On the 4-hour time frame, we could see multiple expansion to the upside. This would be my this would be my approach. Okay, price tapping into that 4-hour fair value gap. What would I do? I would cover up my low, or the low of this expansion to the upside, and then I would target this drawn liquidity right here. And you could see, well, of course, today is Monday. We're kind of toying around in the entry area. And of course, if we were to take that trade, it would be a 1:2.3, which is really good. All right. But that is it for the chats and today's trades. Well, today's review. Of course, if you did enjoy the video, if you did learn something, feel free to leave a like, feel free to comment, feel free to subscribe. Like I mentioned, I have a little bit of a vlog going on towards the end, so yeah, check it out. Ciao.
Taking a cool walk through the hot spot, also known as Groselai. Going to get some lunch. So I'm gonna see what I could get. That's the lunch there. I'm definitely not eating all of that, for sure. Just a regular Saturday. I wouldn't say much of a line, but having some lunch before I go home.